All right. So let's check the vote. The voting. So 50. The highest vote was GBPUSD. So we are starting with GBPUSD. So we'll be analyzing these three pairs: GBPUSD, EURUSD, and gold. So let's start with GBPUSD. All right. Monday, right? I think Sunday. Yeah, that's Sunday. Yeah, Sunday started over here. Sunday started over here, and we had price sweep liquidity. Yes, we had price sweep this liquidity. So we're expecting a reversal already, right? We're expecting a reversal already. Price broke structure over here and came back to give us another liquidity. Ordinarily, we'll be expecting a bite. I wasn't expecting this buy to hold as at that time. I wasn't expecting the buy to hold, but when we had this, I was thinking if this liquidity is swept, definitely this liquidity will also be swept and price to mitigate. So that was why I had this setup on Monday. But ultimately, I was expecting price to come here. Because this was the break was this break we had here was caused by this. So I was expecting price to come here and then we come back here to test this. Ordinarily, this is either going to hold or going to break. I don't know because the overall structure of GBPUSD is kind of confusing right now. Confusing right now. But I'm not expecting that buy to hold, sure. I'm not expecting that buy to hold. But I'm still going to take the buy. Yeah. But without further ado, so this for this we had this sweep. We had this break. But this was the leg that caused the sweep. We had this break. We had the second break, confirming that we are going to be bearish, right? And this was the liquidity. This was the what we call the structural liquidity. This was the structural liquidity to be all set up. So price came and tapped in. That was on, what was that? Price tapped in on Wednesday. Price tapped in on Wednesday and said the sell started. But I couldn't get in this sell. I can't remember why. Yeah, I was focusing on gold. Yeah, I was focusing on gold. That's why I was able to get into the sell. Can you guys hear me? Hello, are you there?
I hear you.
Okay, you can hear me. Let me increase my volume so I can. All right. So I was able to get into this sell, but on the 15 minutes time frame, we can see that we had a sweep over here. We had a break over here. Within this overall leg, this was liquidity, right? That was liquidity. We had a second break. Over here, which made me mark this as my structural liquidity. But because I knew that this was supposed to be taken out, that was why I covered this whole eye. Now ultimately I'm coming down here. I can see some people putting their TP somewhere here. seeing another buy here, fine, you can do that, but I'm expecting everything to come over here and then mitigate this buy. So that's exactly what I'm expecting. That's what I'm expecting. But if that buy, I told you that I don't expect the buy. I don't expect the buy to, but I'm still going to take it. I can't be certain about what's going to happen next on GBP, but if you are going to take this, just risk minimally. Ordinarily, this buy, this is not the kind of setup I should take ordinarily. The reason is because look at this. Let's say this our liquidity. For those that used to mark out QMR using their line chart, this should be the entry, right? This should be the entry. Now I can't use it as my order block. I can't use it as my QMR entry. It's just not my type of entry. So, well, if it holds, fine. If it doesn't hold, fine. Well, I'll be expecting further more. No, I wouldn't be expecting further more sales. The reason why is because look at this. For gold, okay. This took out. I'll be expecting further more sales. This year is a failure low, making this a strong high, which later broke structure. I'll be expecting further more sales. So I don't even think this buy is going to be valued, except the buy is going to come somewhere here and then find a sell entry. Whatever. So let's go to EU. Let's go to EU. I want to be very brief about this because it's like I've overeaten, so my tummy is disturbing me. So this let me mark that out and go to the 1 hour time frame. Okay. On the 4 hour time frame, this is what we had on. This was where Monday started, right? This was where Monday started. We knew that price was bearish. From the outlook here. We had on the daily time frame we had this. I will try to find something. Sorry. Okay. So we knew that price was bearish, and then we knew that liquidity here was taken out. Liquidity was taken out over here. So we had a reversal. Liquidity was taken out over here, and the sell continued. This gave us a break of structure. So we're at least expecting a bearish move, at least to this point, they would have a reaction on the 1 hour time frame. I think you should be able to see that very okay. Probably 2 hours. Or wait, I can't remember where I marked it out. Hold on, please. Sorry. Yeah, I marked it out from the daily time frame. Yeah. For those that lent, depending on wherever you lend, this is a kind of a POI. So I was expecting a reaction there, even if price is not going to break it all through. So I was expecting a reaction here, which price later gave us. So let's just look at what happened as price was moving. Yeah. On the we had this sell. we had this sell. I think for those that watched Idris's video should understand why we had this sell. I watched that liquidity, taking out liquidity on the 1 hour time frame and finding an entry on the 5 minutes time frame. I think we should understand why we had this sell. But for Monday, this was an obvious liquidity for me. This was an obvious liquidity which I was expecting to be taken out. Yeah, that liquidity was taken out. I think my what they call it was somewhere here. My SL was somewhere here. Yeah. And I was expecting to take this out. Let's move to the 15 minutes time so you can see it clearer. You can see the bigger picture. Okay. So that liquidity was taken out. I took a buy and that liquidity was taken out. Yeah, so I sold right from there. And price came to take this out. I had a QMR over here. So I took my profit on this liquidity. Price came, took out the liquidity and bought to this point. Take out the previous day high. When price took out the previous day high, it mitigated this POI I had here. So for this, we had this was a flip zone was taken out over here, right? For those that trade flip zone, this was our OB. This was the OB that flipped this. We already had liquidity over here. So this zone was already valid. And we took the sell. I took my profits here. I had an issue with gold recently, so I didn't cover this old low. So I took my profits here. I was able to enter the continuation because of one reason or the other. So price came to this zone. That's when I already marked this other block. This hidden other block or whatever you guys call it. So price came here and bought. I wasn't able to take any entry in between. But I knew that price was going to take this out. And I covered this as my SL. Let me show you something. EURGBP. There are certain times whereby you will know that price is going to come to a certain place, but there's no entry. Like price is going to take out a liquidity and reverse, but there's no valid entry. Just place your entry on the liquidity and cover the next high. That was what I did here. I placed my entry on this liquidity. I covered. I think on the 5 minutes there was a fear. There are certain gaps. So I covered. I placed my SL over here. Let's see on the 5 minutes time frame. Okay, so I placed my SL over here because I knew that price could come here. Price could decide to reverse from here. But for the ISD traders could also take this as their fair value gap. So you get that was why I covered this whole candle. Anyways, once the liquidity is taken out, there's also a possible price comes back to mitigate something. But I'm not in this trade. Someone sent the setup to me, and then someone asked me to give her a pair to analyze. So I gave her GBP, and she sent a setup to me. She placed her OB over here, and I sent mine back to her. But that's not what we are here for. So this liquidity was taken here, and price started dropping to take out this. Overall, I'm expecting price to come down to this to take out this entire low. I'm expecting price to come down to take out this entire low. Partials have been taken already, but it's still on. This was actually what saved a certain prop I was trading. Yeah. So I think okay, this was not a, how would I put it? This is not the type of trade I'm actually supposed to take. Reason being that this was a break of structure. Yeah, this could be marked as a break of structure, but I will mark this as my break of structure. Liquidity was supposed to be taken here. Before determining to buy to sell further. But what I was seeing all this as liquidity. So I marked them out. And I didn't enter this trade, sure. I didn't enter, but because I knew this was very, very strong, I didn't enter the trade, sure. What else? So for the weekly analysis, we are currently in this market. We are currently bearish. Yeah, we're still bearish. Price already mitigated. I think price already came here. But it's not a kind of trade I could have taken, because I couldn't see any liquidity. To enter from. So I'll just leave price to sell and then give me a valid entry before I can decide to sell further. Then let's go to, but ultimately I'm expecting price to drop down to this daily low. That daily low. All right. Now let's go to the king. Yeah, gold. I'm sorry if I'm not explaining deep. If I'm not explaining thoroughly, I'm kind of in a hurry. All right, for gold, yeah, we've been quite bearish for a while now. If you can see this liquidity, when this liquidity was taken out, we had it was our all-time high, which is also a liquidity currently. These are all-time high. This refused to take out this all-time high, making this I'm explaining it here, making this a failure. A failure low, or a failure swing, whatever you choose to call it. Hello, are you guys with me? Hello? Am I here?
I'm here.
All right. Okay, making this a failure low. So this over here is still liquidity. Well, is depending on the perspective you are looking at it from, this could be our weak eye, or for what we are looking at, let's just mark this as our strong eye until this is taken out. So you get. So for this, let's go to on the 4 hour time frame. We have this as our strong eye, weak low, strong eye, weak low, strong eye, weak low. weak low, strong high, weak low, strong high. So now this is a strong high. A strong high. Let me take this out. That's a strong high. And then price has been mitigating one after the other, taking out all this. So the next low we're expecting price to take out is actually this. So on the 1 hour time frame, we can see. Wait, before we analyze, let's go through what price did on this week. This week. So market started over here. All right. Yeah. So price that market started here. Initially, I had this bias. Where is it? And I know the same. Okay. Initially, there was this bias on before markets close. Yeah, before markets close. Some brokers mitigated them. Some brokers did not mitigate them. So on Monday, what price was it? Was price started dropping. Some brokers took out, all brokers took out this liquidity. All brokers took out this liquidity, but not all brokers mitigated the OB. So what price did was price started dropping, and I felt it was already gone. And price came back and mitigated and took out this low. Yeah, price took out that low. Then I was supposed to buy from somewhere, react, which it did. It reacted and came, because we are still bearish. This was our liquidity. This was, some people entered from here. You could have entered from here. They are very close to the liquidity from here. But I decided to refine it. And if after refining, I covered my strong eye. Because if you go to lower time frame, this is a break of structure. This is a liquidity on the lower time frame. So I decided to cover the whole eye. And this was an OB. Very good. What you say? Hello, what? I can't hear you. All right.
Oh, you can't hear you.
You can't hear me? Hello? Can you hear me? Hello, can you hear me? Hello? Timothy, are you there? Can you hear me?
I don't know.
You can't hear me?
I can hear you.
You can hear me? All right. So we're expecting price to take out this low. Which price did, after taking out the this was a break of structure. This was ILQ here. The IL over this, the leg that took out the ILQ, was all liquidity. So I marked it as waiting in the corner set as structural liquidity, and price, and this as IPA, as the nearest IPA, not necessarily other block. Nearest inefficient price action, like there was a gap here, so this was the nearest IPA for me, and I marked it out, and price mitigated and came down. filled everything over here. Filled everything over here. Ordinarily, as a day trader, this should also have my TP here. But because I knew that price was moving, was going to clear everything, everything here up to this daily low. So I left that. And I think for those of you who are on my channel, I think I showed you this setup. I showed you this setup, this sell. But let's leave that for now. On there was a certain news. For that news, this was what I was having. Price was moving, everything was already cleared again. So I knew that we needed a reversal. So I was expecting that reversal to happen. So we are still bearish all the way. But immediately this, I think, this is not a valid leg. So the leg came over here. Yeah. No? He didn't even break it. Came over here. Came here. Took it out. Before moving up. Let me show you this way. We are bearish. all the way. Let's bring it out. We are bearish, right? We needed a reversal. Price gave us, we needed a reversal. Price took out this liquidity. Price gave us a break of structure. Within this leg, everything here was liquidity. Look at this. This already mitigated this. This already mitigated this. So everything here was liquidity. So price needed to take this out as an inducement to push further. So that was what we had over there. And even when price, I think price took out this force. Price took that out first. Let me show you. There was, can you see, this was like, if you watch this guy's video, ICT's video, you know that the marking out your liquidity is from this swing point. Well, that's not what we call swing point, but this swing structure, I don't even know how I'll put it, considering what we have learned from different places. But we have this eye, this candle. We have this candle. And there was a wick over here. And there was a wick over there. This would rather be marked as the swing point. Like, well, I don't know how to explain that. But some of you might have understood what I'm talking about. So that was where the internal liquidity was taken out from, which would have hit TP if our TP was here. But I put my TP because I knew everything was actually going to be cleared, and price was actually going to mitigate this each another block that I marked out there. the hidden order block that I marked out. Where's this hidden order block that I marked out here? So price came all the way here. Partial was taking over here. Price came all the way here, and this candlestick like this. This candlestick like this. It has liquidity and it has what's in the column. It has both liquidity and order block. So for some people we mark out 50%. We don't know what happened on the 30 seconds time frame. We don't know what happened on the 30 seconds time frame. But on the 1 minute time frame, we know that price just swept everything like that. Some people mark out what's in the column. Some people mark out the week and use 50% as 50% of it as the remaining 50%, the first 50 as liquidity. Some will use the remaining 50 as order block. Some will also use this. Get what I still teach one time like that. We use this as liquidity and enter over there. But it's not my, as long as I'm not seeing a structural liquidity, it's not my type of trade. Left it and price came all the way here and mitigated this. The reason why I had this here, because some were asking that, what am I seeing over there? Look at this. Price was bearish all the way. We had a break of structure already. This was our strong eye. So we knew that price wasn't going to break it. So we had a break of structure already, making this also a strong eye. Here you get a strong eye on. Please, can you mute yourself, or you have something to say? All right. So we had a break of structure here. This one. Hello, who is there? Are you saying something, or you mute yourself? All right, making it a strong eye. So once this was taken, there was a break of structure on the 15 minutes. There was a break of structure. So this was also an IRL. Internal liquidity. On the 15 minutes time frame, the nearest liquidity that we could see. Okay. I think I analyzed it on the 5 minutes time frame. Yeah. This was the nearest liquidity. This was the nearest liquidity, which was taken out. On 15 minutes time frame, this was also a liquidity. This was the liquidity. Yeah, this was the liquidity. But this liquidity where I mark here, you don't mitigate this already. I don't know if you are getting, you don't mitigate this already. So I was expecting price to take out this liquidity and start selling. Well, most of your e-dollars took their entry from over here. I can remember vividly that when I saw T-Forex and Royal and Mandy inside the trade already, I sent a message to T-Forex. I was typically down, thinking I've missed the trade I was waiting for the whole day already. So I just left it. But I still posted around that I was still expecting price to come in, because as long as this has not been taken out, as long as this low has not been taken out, when in fact, as long as this has not been taken out, price will still come here before coming down. Because yes, liquidity was taken, but is there enough liquidity? So what price it was, induce, take this out, break of structure. The normal SMT traders will come here, mark this week. 50% of the week has been taken out, normal. So they'll come here and look for, they'll mark this out like this. They'll mark this out like this. Say, I don't know, there's a way people mark, well, there are different ways people mark out their nonsense out. Well, let me call it nonsense, their POIs out, that is, they always mark out liquidity. They mark this out, thinking that okay, this liquidity price will definitely take this out. Sure, you get. Ordinarily, when I was even learning, I could have marked this out as my liquidity. I would have marked this out as my liquidity. But no, price hasn't taken this out. It hasn't taken. If price took this out, I could mark this as my liquidity, and over my I could be here. So I expected price to mitigate this entry, which price did. Immediately price mitigated this. I didn't even know. So I think price was already here. Price was already, no. So it was like 5 minutes after. Yeah, price was already here. Sniped, and price was already here. Around here. That was when I saw it, and I sent a screenshot to those in my WhatsApp channel, and those I already sent set up to. Yeah. So for gold, what I'm looking to see this week, yeah. Price, I'm expecting price to take out. Normally, we don't get sweep now. We don't get sweep. Within this sweep, this is the low. So these are a break of structure. This is necessary break of structure that confirms that we are bearish. Wait till I use marker now. Check. So this is the break of structure. For this break of structure now, after this break of structure, this is the transactional, this is the internal liquidity, right? This is the first internal liquidity. After this internal liquidity, we need an entry. So for this now, I can't even see a valid entry, because these are liquidity. These are liquidity where I can see a valid entry, but well, it looks too close to market price. Well, last week we had something like that also. So this is what I'm expecting. I'm expecting price to first tap into this. I'm not saying this is what will happen. I'm expecting price to tap into this and continue selling. I think price tap into this and continue selling. The sell should continue, at least to take out this low first. Take out this low. After taking out this low, then we can have something like this. If you have any liquidity here, tap and then continue. But for my overall setup for this week is still bearish. I'm expecting this low to be taken out this week. I think that will be all for now. In fact, if this low is taken aside this low just being taken out, I expect price to close this week around here, around somewhere. Well, I've not checked news events, but my bias for EU, I think EU was also bearish now. EU, GU, and gold bearish. No, I think GU. I had a bullish setup, but I'm expecting it to be bearish. I mentioned that now. Yeah. So EU, GU, and gold, I expect them all to be bearish. So I've actually been seeing some of your idols posting bullish setups, but that will not concern me. Yeah. It's either I chop SL or we chop SL or we chop SL together. So just do your thing. Make sure just ensure that you are doing the right thing. As long as you understand your structure very well, you understand your ranges very well, you understand your your internal range, if you are using internal range in the aspect of range, you understand your internal range very well, and you know your POIs. Yeah. For the benefit of those that join this class, let me just talk about POIs that join this session. Let me just talk about POIs. We have different types of POIs, but majorly I stick to these POIs. Order block. Let me type them out. Order blocks. Support and resistance. Breaker block. Breaker block. Unmitigated weak. Unmitigated weeks. Also, what else? Unmitigated weeks. I think that's what I can remember for now. Yeah, QMR. Under that QMR itself, we can still classify it under let's just QMR. If you have breaker blocks already, so you can also say QMR. So these are the major types of POIs that I use. For the breaker block, for the order block, let's say price is bearish. Price is bearish. We have a form of liquidity. This liquidity, this liquidity, yeah. Okay, let me mark it this way. Price is bearish, and we have this is the liquidity. Price came, did something, gave us that liquidity, and this is what we call that blocks. Most of you know that already. Then for the breaker blocks, probably price is currently bullish. And probably there was a news. And price impulsively broke this. Right? This price impulsively broke this. Either we have the liquidity here, or the gap is too impulsive. The gap here is too impulsive. So we are going to have this as our entry, and then price will further push. So this is going to be a breaker block entry. It's going to be a breaker block entry. That's breaker block. And then for support and resistance, let me just show you on the chart. I think I don't know. It's when I'm analyzing, I see these things. But when I'm trying to explain stuff, I don't see them. Hold on, please. Okay, this support and resistance. This support and resistance entry. This support and resistance entry. This reaction was from the support and resistance. Some people mark it out from here. Some people mark it out from here. Some people mark it out from here, but I mark everything out depending on how long the other one is. How long? So that's support and resistance. If you scroll down to the lower time frame, you can see it in form of an order block or whatever. So that's support and resistance. And what else? The okay. We need unmitigated wicks. Yeah, unmitigated wicks. Look at this here now. These are non-mitigated wick. But when you scroll to your lower time frame, you can see it in form of an order block. Let me show you something that is very, 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 very close. I'm looking for. Yeah, look at this now. This is also support and resistance, but there was no liquidity. There's no liquidity to induce the entry. Unmitigated weak. Unmitigated weak, no hard to find now. Yeah. This week was an unmitigated week, which was later mitigated. Yeah, the week was mitigated by this, but 50% of the week, 50% of the week was never mitigated. So price came back and mitigated that. I'm looking for a week that was not mitigated at all. Yeah, this week. This week was also not mitigated at all. Price came back to mitigate it. So like that, okay, yeah, these are not mitigated week. These are unmitigated week. For me, support and resistance, these are not mitigated week. Yeah. So all these POIs, sometimes they are interwoven. Once you scroll down to lower time frame, you're seeing other POIs within them. And we have I explained QM. Okay, I've not explained QMR, but I think most of you should know QMR now. We have a price was, let's say price was bearish. Price was bearish. We have a sweep. We have a break. Let me do that. Let me do that way. That's what you've been seeing all along. So price was bearish. Price did something here before breaking structure, giving us that our structural liquidity. Price comes and push. This schema is a model. Yes. But this schema can either give us our entry from an order block, from an IPA. But in most cases, if this OB is far, it's far from the liquidity. This what do you call it? This is what most people use as their entry. But I can tell you categorically that this is not necessarily where price reacted from. Price actually reacted from the nearest IPA and not this. The nearest inefficient price action and not this. But if you are using QMR entry model, always make sure that you cover your strong low. Always ensure that you cover your strong low. In most cases, price reacts from the inefficient price action, price could react from the other block. Probably the bearish candle started from a long candle or whatever. But if you are using QMR like most people use it nowadays, if you are using QMR, always ensure that you cover your low. I think that will be all for today. My schedule was just to show you, was just to do end of week with you and also analyze what we're expecting for the coming week. Yeah, I think let me just take a few questions if you have any question. Any question? All right, since there's no question, I think we can.
That's 100 chat.
Who is talking? Victor. Nas 100. Well, Nas 100 is not something I hear, but let's check.
Okay, thank you.
I was actually in a rush, but well, this sheet is already bearish. All right, Nas 100. Well, the reason why I'm avoiding Nas 100 is because we are currently in a. I think this is all-time high. This is the all-time high. This is the all-time high. I'm expecting price to either take this out or give us a failure swing before I can know what I'm expecting. However, on the 1 hour time frame, I can see this. I can see this as a failure. I'm seeing this with the I can't see it as a failure swing already. I can't see it as a, except this is taken out. When people are still trading it, looking at it from the lower time frame perspective, well, I want to have an understanding of what is actually happening on the higher time frame before I know what, except it is taken out. Yeah. But currently we are bullish. Currently we are bullish. Price reacted from here. There's a price reacted from there. Price failed to break this. Price failed to break this. So I can probably, well, price failed to break this. I can probably see this as a failure swing. As a failure low. On 15 minutes time frame, what do we have? What do we have? Let's assume this was a break and we kept on having IRL. Price came, gave us an inducement. There was no entry to mitigate over there. Yeah. So I honestly don't know. But price should do this. This near to this liquidity. Yeah, the liquidity has already been taken out, but to this liquidity, the nearest PY is this. This is unmitigated week. But I can't say I trust this unmitigated week. I've been to on the 4 hour time frame or daily time frame, I could have trusted. Yeah, but if I were the one, I would take a buy with a minimal. I would not even enter. But I'm expecting price to buy. Yeah, I could enter. Yeah, I could enter, but if I'll be entering, I will cover this whole low. That's the area. So I need price taking that. Price to definitely take this out. Price to definitely take this out. So that's what I can say about NAS 100. If I see what price does tomorrow morning, yeah, I can start dropping NAS 100 on my wetin dey call am, on my group for you guys, on my WhatsApp channel for you guys. All right, I think from here we can call it a day. Or any other question? Any other question? Are we good to go? Are we good to go?
Yeah.
All right. So we can call it a day. I'll drop this video on the Telegram channel. That's one. For those who are subscribed to my YouTube channel, the video will be available tomorrow morning on YouTube. For those who haven't subscribed to my YouTube channel, I will beg you to please subscribe. I'll drop the link also on this channel, and please do well to follow me on my social media pages. I'll drop the link on this channel, on this Telegram as well. Thank you very much for attending. I
Thank
wish
you very
you
much, bro.
what say? Who's
Thank
talking?
you. Thank you very much. Thank you.
All right, I appreciate all of you for coming, for showing up. So I think before we go, let me just check the news events we'll be having for this week. Let's check the news events we'll be having for this week. So be careful with on Monday. I don't think there's nothing on Monday. There's nothing on Monday. Yeah, there's nothing on Monday. On Tuesday, USD pairs can be in danger 4 p.m. Wednesday, AUD, CNY, Chinese yen, Euro. Nothing is going to happen on Euro until USD news takes place. So Euro USD, Canadian USD, and GBPUSD might be in trouble. I don't want to tell you guys to run from the news, but always be careful. Always be careful while trading the news. Yeah, there's nothing wrong in trading the news actually. Just ensure that you are doing, how do I put it? You have the right analysis. You are doing your analysis rightly, so as to avoid all stories that touch. So as to avoid all stories that touch. Well, even the best of us lose accounts. I think early I've lost accounts recently. It was not even my account. I took the account out of drawdown. The account was almost gone. I took it out of drawdown. I think I didn't know that the firm was actually trading. You know that some firms actually trail your profits, and some don't trail it. So the firm was actually trading it, and so even before market hits the stated drawdown, the account was gone. I didn't know. I had to apologize, but the owner of the account was so happy. Like the mere fact that he never believed that the account could get resuscitated out of drawdown. But what's the essence of taking the account out of drawdown when the account still got blown? But it also gave him hope, one way or the other. I don't know how. I'll be dropping the links to my social media pages very soon. In in 15 minutes. Yeah. Thank you very much for showing up. I really appreciate. Hope I no consume your data. Bye.